if you're 65 or older and you've heard something online about a new senior bonus check coming your way in 2026, I need you to hear this clearly. Right at the start, there is no check. Nobody is mailing you cash, but there is something real behind that rumor, a brand new tax deduction worth up to $6,000 for one person or $12,000 for a married couple, and if you misunderstand what it actually is, you could either miss claiming it entirely, or you could spend money on a service promising to release a payment that was never going to arrive in the mail in the first place. So let's clear this up completely, using the actual language from the tax code, not the version that's been passed around in comment sections. Here's where this comes from. In the summer of 2025, Congress passed a tax law called the One Big Beautiful Bill Act. Buried inside it was a new temporary tax break specifically for people aged 65 and older. It's officially called the Enhanced Deduction for Seniors. So most people are calling it the Senior Bonus Deduction. It applies to tax years 2025 through 2028, 4 years, and then, unless Congress extends it, it disappears. Now, here's the part that gets misunderstood the most. This is a deduction, not a credit, and definitely not a check. A deduction doesn't put cash directly into your bank account. It reduces the amount of your income that gets taxed in the first place. Think of it this way, if the government normally taxes a slice of your income, this deduction makes that slice smaller. You don't see a new deposit labeled senior bonus. What you see months later when you file your return is a smaller tax bill or a bigger refund than you would have gotten otherwise. Who actually qualifies? You need to be 65 or older by December 31st of the tax year you're filing for. You need a valid Social Security number on your return. This deduction isn't available if you file using an individual taxpayer identification number instead. And critically, if you're married, you have to file a joint return with your spouse to claim it. If you file as married filing separately, the IRS position is that you're not eligible at all, even if you personally meet every other requirement. Assuming you clear those hurdles, here's what you actually get. $6,000 off your taxable income if you're a single filer, and if you're married, filing jointly and both you and your spouse are 60. 5 or older, you each get your own $6,000, which stacks up to $12,000 combined. If only one spouse is 65 or older, only that spouse's $6,000 applies. Now I promised you real numbers, not vague ones. So let's actually stack this up the way the irs does, because most people don't realize this new deduction is just one layer of 3. The first layer is the base standard deduction that everyone gets, regardless of age. For 2025, that's $15,750 if you're single, or $31,500 for a married couple filing jointly. The second layer already existed before this new law. It's the additional standard deduction the tax code has given to people 65 and older for years. For 2025, that adds $2,000 if you're single or head of household, or $1,600 per spouse if you're married. The third layer is the new senior bonus deduction we've been talking about, up to $6,000 per qualifying person. We'll stack all three together, and here's what it looks like for a single filer with income low enough to get the full amount, $15,750 plus $2,000 plus $6,000. That's $23,750 of income that federal tax simply doesn't touch before you've claimed a single other deduction for a married couple where both spouses are 60. 5 or older, it's even bigger, $31,500 plus $3,200 combined for the age-based add-on plus $12,000 for the new senior bonus. That's $46,700 completely shielded from federal income tax. For a lot of retirees living mainly on Social Security, a modest pension, and some retirement account withdrawals. That's enough to bring their federal tax bill down to a very small number, or in some cases close to zero. And this is the part that trips people up, this deduction isn't available to everyone at every income level. It has a phase out, and the phase out has a specific trigger point. For a single filer, the full $6,000 deduction is available if your modified adjusted gross income is $5,000 or less. Above that line, the deduction shrinks. For every dollar of income above $75,000, you lose 6 cents of the deduction. By the time your income reaches $170,000, the deduction is completely gone. For a married couple filing jointly, that same math starts at $150,000 of combined income. And the deduction disappears entirely once your combined income hits $250,000. Let me put a face on that math so it actually lands. Picture Carol, 60. 8 years old, single, a retired school teacher living on a pension and Social Security. Her modified adjusted gross income for the year comes out to $58,000. Because that's well under the $75,000 threshold, Carol gets the entire $6,000 deduction, no reduction at all. Now picture Frank, 70 years old, also single, with a larger pension and some dividend income that puts his modified adjusted gross income at $100,000. Frank is $25,000 over the $75,000 line. Multiply that $25,000 by 6 cents on the dollar, and Frank's deduction shrinks by $1,500 instead of the full $6,000. Frank gets $4,500. Still real money, just not the maximum, and one more thing worth knowing. Because it's connected to a rumor almost as big as the bonus check one, this new deduction does not eliminate taxes on Social Security benefits. You may have heard messaging suggesting Social Security itself became tax-free. It didn't. The program and its taxation rules weren't directly changed by this law. What actually happened is that this new deduction lowers your overall taxable income, and for a meaningful number of middle income retirees, that lower taxable income means the portion of their Social Security that would otherwise be taxed ends up being partially or fully offset. It's an indirect effect, not a direct repeal, and the distinction matters if you're trying to plan around it accurately. So how do you actually claim this if you qualify? You don't need to apply anywhere in advance, and nobody is going to contact you about it. It's claimed when you file your regular federal tax return using a new form the IRS created specifically for this called Schedule 1A. If you use tax software like the major filing programs, entering your date of birth correctly should cause it to calculate this automatically if someone else prepares your return for you. It's worth asking them directly whether they included Schedule 1A, especially if you filed early in this year's tax season when the form was brand new and some preparers weren't yet familiar with it. And here's something important. If you already filed your 2025 return without this deduction and you think you qualified, you're not out of luck. You can file an amended return using Form 1040. To go back and claim it. Now let's talk about the scam angle, because anytime a benefit like this gets media attention, it becomes bait. If you get a call, text, or email claiming to be from the IRS or Social Security, telling you that you're owed a senior bonus payment and asking you to click a link, confirm your bank account, or pay a processing fee to release it, that is not how this works. There is no payment to release, there is no fee. This is a deduction that shows up on your tax return, calculated by you or your tax preparer, not a check that requires you to do anything to unlock it. If anyone asks you for money or account information to get your bonus, hang up. Let me leave you with 3 concrete things to do. First, if you haven't filed your taxes for this year yet, make sure whoever prepares your return, whether that's you, tax software, or a professional, specifically checks for Schedule 1A and confirms your modified adjusted gross income falls where you think it does relative to the $75,000 or $150,000 threshold. Second, if you already filed without it and you believe you qualified, look into an amended return using Form 1040X before too much time passes. Third, if your income is sitting close to one of those phase-out thresholds, it's worth a short conversation with a tax professional about timing. Things like retirement account withdrawals or charitable giving can sometimes be adjusted to keep you under the line and preserve more of the deduction. This deduction is real, it's worth planning around carefully, and it's available for 4 tax years starting with 2025. It is not a check, it is not automatic outreach from the government. And understanding that difference is what actually protects your money both from confusion and from anyone trying to profit off that confusion. A quick disclaimer before we go: this video is for educational purposes only and isn't personalized tax or financial advice. Tax rules involving modified adjusted gross income filing status and phase outs can get specific to your situation, so it's worth confirming the details with a qualified tax professional or directly through irs.gov before you file.